Hi, everyone. Welcome to our podcast, Discover AIG Multinational Latin America. I'm your host for today. My name is Alan Rodriguez. I'm the Regional Multinational Client Exec and Global Fronting Underwriter for Latin America. And for today's episode, we have a very special guest, Luis Acevedo. Luis, would you mind introducing yourself today? Thank you for joining us.
Thank you, Alan, for the invitation. So my name is Luis Acevedo. I'm head of risk advanced analytics and captive practice for Latin America. Working in the industry for more than 25 years. I'm very excited about the work that we do.
Thank you. Sounds a lot of fun.
Yes,
And
indeed.
so we're kicking off today's episode is around alternative risk transfer solutions for Latin America. And while globally captives have seemed to not be part of the alternative risk transfer realm, that may seem not as accurate for Latin America, right? So we've seen Latin America sometimes still see the concept of a captive within the art space. So I would like just to kick off the conversation. What's your view around the alternative risk transfer solutions for LATAM?
I think that the captive world has been for decades around the world. The true story for Latin America is that it's not so well developed, basically because people didn't have into account what a captive might do for them, how it was just one more part of retention. So I think it's just an evolution in which we will end just seeing that the captive is just one way of retention, like self-insured retention vehicles and other deductibles, aggregates, whatever. But I think it's just a journey that Latin America is starting to have. And I'm very excited to be part because actually brutal flags is that captives around the world, more than 90% of the T500, they have their captive. So I think that dynamic and that momentum is starting to gain a lot of enthusiasm in Latin America in the last couple of years.
Oh, very interesting. And while we look at a captive as a part of the risk retention strategy from a client, right? What would you think are the key drivers that can accelerate risk retention strategies for the today's world and in the near future?
What I think is that we have huge enablers right now, and it's data. So right now, what we can do just to quantify the risk with the tools that every single client, insurance companies, reinsurers, brokers, they have available, when we are able just to see those quantification, understand volatility, it's like we have a lot of tools just to determine how much is your retention. Can you go a little further? If we give that confidence to the clients, in which sense we can tell them volatility looks like this, then we can start just triggering those conversations in which probably they can retain a little more. And then we can suggest different alternatives like captives.
Well, it may seem an easy step to defining the risk retention strategy, but we've seen clients are unique and there's no one size risk retention strategy fits all, right? It depends on the client's risk appetite. What would you see are some of the challenges for defining the right risk retention strategy?
I couldn't agree more. So one of the things, probably not sure if you agree with this comment, but most of the insurance industry has been just trying to place programs in which we are discussing about deductibles, we're discussing about premiums, terms and conditions, but we never take into consideration really the tolerance, risk tolerance, how much is just risk appetite, so we can define that framework in which we can start working. And just having that stand alone with only property, only casualty, only benefits, whatever, we have lost somehow that holistic view what risk is. So right now what I think is happening is that we're starting to have those data-driven tools in which we can see the correlation within all the risks, and we can define that framework with the risk appetite, so we can give really good advice to clients. They can see, and conversations are just starting to be around more, not only premiums and deductibles, how much budget I have up there, is how much capital we are bringing to this company, and how insurance is just one more source of capital. So I think that's changing, and it's an evolution, especially in Latin America, in my opinion.
Well, thank you. Very interesting. And what would you think are the main benefits a strong pace and risk retention strategies have to offer for clients, brokers, insurers, reinsurance brokers, retail consumers? So what's your thoughts around that?
Wow. So let's think about this. When we are able to quantify in a more precise and give confidence to every single stakeholder, I mean, clients, brokers, insurers, reinsurers, when we are able just to do those quantification and we are able to tell them, for example, you know what, you can invest double the premium. This is the volatility you're taking away from your financial statements. Or you want to pay half of the premium. This is the volatility you are bringing. What is the strategy you want to have with your shareholders? So actually, we are just like giving value to the insurance right now, in which the captive is a perfect vehicle because you understanding what is your risk tolerance, your risk appetite. You can have that analysis. You know what? I need to change the view from 1 year policy to what's the long term for risk financing. So when you are able to see, okay, I can receive certain amount of loss every 10 years, how do I start just preparing and financing for that risk? So that's where the captive world is just like having the tools today, and there's this big thing going around capital in which just the captive world is just one way just to start having wise use of capital with the clients.
What would be your expectation for the art space for LATAM? What are your predictions for the region?
Wow. So I'll call you in 5 years to see how accurate it was. So first thing is, I think risk managers, it doesn't matter if you're in a broker, insurance, reinsurance, we're changing the role of what a risk management is. So we're changing from just trying to go from the operational risk, how we transfer the risk, to a certain thing in which risk managers are redefining their role in the sense that they need to support the company in the financial resource that they're having, and just to be sure that resilience is over there and that they are paying a certain amount of premium just to bring more capital to their companies. So what I think is going to happen is we will start just getting more conversations, not only from the premium deductible aggregates, but is how much value is bringing, how less volatility, how is improving the earning per share if we buy one program option or the other, if we have captives or if we have aggregates, or so it's like we have all the levers just to see how it works. And because all the data tools that we have, quantification that are available for us right now, it's going to be like easy just to take any decision based on data and what is the expectation. So I do think that Latin America, it's going through a journey in which we're having more tools. We're having this collective education in the sense that we're seeing insurance in a different way, and we will start having different conversations with the C-suite levels. And I do think that the risk managers are going to have a most important role in the next couple of years.
And maybe if you can share your final thoughts, I would maybe add, what would you see as the best scenario timeline for a client to work on the process and achieve the right risk retention strategy for them? If you had a client front face today, what would be the best timeline to work on this to achieve the best risk retention strategy?
Wow. So I think that it's a process that it's always ongoing. What I think is that we have to give data, how much retention they should have, how much limits they should be having. And I think it's a process that is going to take a couple of years. But I think that the structure is very clear in the sense, let's understand your financial statement. Let's see how much risk appetite you can have. Let's put how many years you want to have the journey. Because there are certain emerging risks, for example, right now, in which now you can see visible, just to put an example, cyber. If we just disclose that you probably have $200 million of exposure, and you are not buying a cyber policy, that is what is happening right here in that time. But if we give visible that kind of exposure, we can start just building the journey. Not cyber standalone, not property standalone, just the holistic view. So I think that journeys are starting to have with clients. I do think it's a strategy that takes 3 to 5 years just to start seeing how is your understanding of those financing techniques that you got. And it's very, I think, I don't know if you agree, but there's certain clients in which, for example, having a captive, you know you're going to have a captive. The only question is when, and how you just go through that journey just to identify this is a good use of capital, I can use it, and we start building for that kind of resilience in the retention.
Completely agree with you. Well, thank you, Luis, for a very insightful session today. I want to thank you, and hopefully there will be more conversations around risk retention art solutions in LATAM. And for our audience, thank you for joining us today. I want to remind you to follow us on our AIG Latin America YouTube channel and stay tuned for our next episodes. Thank you.